Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linden Associates with your agriculture update for this Monday, the 10th of April, 2017 at 1:55 p.m. Central Standard Time. Well, we have a mixed bag. We had strength today in both the wheat market and the corn market. The meal market up a fraction, but into some resistance that you'll see in a moment, and the beans slightly lower. Sugar market still down. Cocoa market was down today. Cotton market getting a bounce finally in it. And in the energy markets, well, they're basically higher as the day goes on, with metals a bit lower. In fact, more than a bit in the copper got hit fairly hard there. Platinum got smashed. That's the right word. And most of the stock indices up, not big, but a nice rally nonetheless. So as we take a look on the weekly chart of May soybeans, you can see how the market has come down and it's flattened out now over the past 2 weeks. We're waiting to see what happens next. In terms of a close-only chart on a daily basis, you've gone from a high of 1052 1/4 to a low of 937 3/4, and you're roughly 5 cents off those lows. Certainly not a big move. Should the market clear this hump that we see right through here, then I could say possibly that the market is starting a small upthrust at that point. If the market gets under 936 and closes under it, it's going to take this level here and probably carry the market down even further. Ultimately, you could be headed to the $9 mark if you start breaking out to the downside. What the market's looking for, just like it did here, is what's going to come out of this sideways pattern, and you have a very similar one right there. The key numbers probably the 936 level. That would take out 37.5. You did turn the swing line up today, so you do have a pattern of higher highs, higher lows. The market is still under the 18-day average of closes and the 100. I call that the 18 MAC and the 100 MAC, but it's well under it, so the most I look for in a rally is back up to that number if it can rally. Bollinger Bands are back down at 919.5, so support's fairly far away from here, roughly 24 cents or so. And when you look at the momentum, the slow stochastic rules the day, and it has stayed embedded. So until it loses that pattern, the odds of getting back up here are not very good. In fact, if anything, you take out that 936 level, I get very nervous with the embedded reading that you're not going to be headed back to that lower Bollinger Band. In the meal market, you still have the embedded reading here. Like the soybean, you've got the pattern of higher lows. Today's high at 311.50 did take out the past one of 311.30. So we have the pattern of higher high, higher low here. However, you're still under the 18-day average. You still have the embedded reading. This rules the day, and therefore, as long as slow stochastics stay locked into a downtrend, you should be remaining in the bear camp. Soybean oil is now joining in. If you take a look today, both numbers are under 20. The day before, both numbers under the 20 level, and the day before. So you have a fully embedded reading. Wouldn't surprise me if markets make a run for the 30-90 level. So the whole soy complex has got embedded readings which are still bearish, while the corn market came back up to challenge the 100-day average of closes. As I told you before, I thought that the hedgers were coming into the market up here, the corn people, and I thought that they were buying them back against this level. Now the battlegrounds, the 100-day and the 18-day, but corn is back into a minor uptrend at this point, which makes sense. You know, you've been losing corn acres for the planting that are moving to soybeans, and we're hearing that China might do more grain purchases, and obviously corn would be a beneficiary of that. Maybe even the soybeans, but there's so much in the way of soybeans, who knows? In the wheat market, it's just back and forth, caught right here in a downtrend, but momentum is trying to turn up. So I think the key now is, does the market take out 430 3/4 and negate this downtrend? Doesn't mean it could start an uptrend, by the way, because you'd have a lower and low and a higher high. And no matter what happens, I look for formidable resistance between 435 and a quarter and 434 and a half, the 100-day average of closes, and the upper Bollinger Band. I'm moving gears to the July sugar. Now, if we take a look at the market, on Friday you still had an embedded reading. Today's close, even though lower, took the market ever so slightly out of being embedded. It can re-embed tomorrow with a lower close, so we'll have to wait and see how that market's going to react to it. If it stays out of embedded, I'm going to look for the market up to the 18-day average of closes. In the coffee market, you have a pattern of higher lows, higher high, stuck at the 18-day average, actually just slightly below it, an oversold condition trying to work itself out of that. In the cocoa market, big failure today. Now, admittedly, we're very oversold. This is the July contract, no longer the May that I'm looking at. I'm still targeting right here, this 1900 area, so keep your eye. Let's see what the market does there. And in the cotton market, you seem to be coming down as well. We'll have to see what the market wants to do here as the market just keeps working its way down to somewhat lower prices as well. We then get to the cattle market, which rallied on the news that China was going to lift the 14-year-old BSE, which is the mad cow disease, ban on U.S. cattle. It's been that long. And the market went to that number, collapsed after it hit it, that's what I call that, ran into a brick wall in the May feeders and is in an overbought condition. And the hog market up slightly today and trying to lose, just like we saw in the other market here, trying to lose like sugar, the embedded reading. Tomorrow's the key day. If the market fails again, especially if 72.35 is taken out, you could get another leg to the downside. If you lose the embedded reading, you might be headed back up to the 18-day average of close. It's going to be an important day tomorrow in some of these markets. And we also have Tuesday reversals, which means markets up today might see some action down tomorrow. I want to talk to you about Modern Trader magazine's offering technical trading tips from the top pros. Gann square of 9, important rule. You should all know what it is. The absolute benefits of relative strength. I prefer slow stochastics, but it gives you an idea. How do you optimize stops? A great article, and we all always think the market's gearing for our stops. How do you get this? Give us a call or go to our website. You'll see our offers right up there on a carousel of free offerings. Click right up here. If you're watching me off of YouTube, you'll see an icon. Click on that. Everything will play for you. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.